So would you have a target in mind for maybe the back half of the year?
Yeah, I think we will see it going back towards 4.5. And when we get closer to that, you'll hear something from the administration that will be very worried about the mortgage issue in the context of the affordability issue. You'll hear more about some form of yield curve control. So I think we are in a range from 4 to 450, with the average being closer to 450 than it is to 4.
Mohamed, if you were a PM right now, and you look at some of these software stocks that have just gotten absolutely crushed, and multiples now are half what they once were. I don't know. I'm just curious how you view it. I know you're not a PM, but you certainly talk to plenty of people who are still investing. What are your thoughts about that? Whether there is that opportunity or whether you have to really tread carefully?
So I would say we're in a different market. We no longer have the love affair with AI that we had last year. This is a market David defined, I think, and will continue to be defined by 3 words: volatility, dispersion. You're going to see a lot more dispersion, and fragmentation. And I would build my position bottom up, not top down, and I would certainly be picking up names that were impacted by this theory of the market for lemons, meaning they overshoot on the way down because they end up having one technical correlation with names that are weaker. So I think this is a massive opportunity for stock picks, and particularly in the AI world and in the world impacted by AI. So for me, this is a world in which people should be building their portfolio bottom up and picking up some really good bargains at this point. It doesn't mean you buy the sectors across the board. It means you buy those with strong balance sheets, strong business models, and strong leadership.
And just lastly, Mohamed, on the volatility that you're foreseeing for the rest of this year, is that purely tied to AI as the market sort of bifurcates between the winners and losers, or does it also tie to geopolitics with U.S. and Iran trying to focus on the second round of talks?
Yeah, I mean, it ties to both, and geoeconomics rather than geopolitics, meaning that increasingly economic outcomes and policies and market outcomes will be less a function of economic and commercial logic and more a function of national security, geopolitics, and domestic politics. We no longer have the unifying theme. I grew up in an easy world where there were 2 themes: globalization, the ever closer integration of countries, and the Washington Consensus, certain ways you run your economy. We don't have those anymore. So we will get a lot of volatility as we go forward.
Yeah, Europeans clearly trying to wrestle with that as well, given some of the statements in Munich last week. Mohamed, we'll talk soon, I hope. Thank you, as always.
Thank you so much for having me.
Mohamed El-Erian.